Hey everybody, welcome. I'm Stephen Kalajian and welcome back to the futures. We have what a day here today. We had the 8:30 PPI number, and guess what? The PPI number was a little better than expected, and it's showing signs of inflation cooling down. Not that I agree that these numbers. I just think that what you're seeing here is basically the effect of the inflation numbers just being, looked at here in a way that, oh boy, gotta check this door. That I truly apologize. So the inflation numbers came in better than expected, and what we're seeing is that now we see a big pop here. We have the S&P's up 78. We have the Nasdaq up about over 400. The Qs are up 10, and the underlying ETF, the spiders, the S&P 500 ETF is up roughly over 7.5 points. Trading futures to me is one of the greatest vehicles for any asset, for any trader. You could trade these pretty much almost 23 hours in a day. You have the New York session, you have the Tokyo session. The New York session obviously goes from 9:30 to 4. And then you have the Tokyo session that kicks in around 8 o'clock into 3. And then the European session that goes from 3 a.m. into 11 a.m. One thing that I've studied the markets. I'm on my 41st year now. I've been very blessed. I started in 1983. But futures to me is really such a great vehicle to trade. In basically the margins are great, especially at Tradier here. For micros, I believe they're like $50 for a micro for a margin and $500 for an E-mini. And there's better tax credits and applications for when you trade the market in futures versus trading stocks. The other thing that's really important is the leverage that you get. So basically, with trading stocks, you have the 25,000, the PDT rule, right? So it's $25,000 or more, right? Where you get the 4-to-1 intraday. Here, you put $10,000 up in an account, or $5,000 up in an account, or say even $2,500 in the account. And let's say you traded 10 micros. The most the margin is $500, not counting the profit or loss. So again, futures gives you such a significant advantage. When I look at the markets, I built my own proprietary software, and I spent about 10 years of my life building it. And what I can tell you is that there are 5 conditions in the market based upon my research. You can have a trend, you can have a buy reversal, you can have a sell reversal, you can have a correlation, and you can have a disconnect. All 5 of these have significant meaning. And then of the 5 conditions, you have 2 strategies, a buy and a sell divergence, right? So you have 5 conditions, 10 strategies. The way I have my charts laid out here right now on TradingView, I look at multiple time frames. So everything I do is based upon multiple combinations or multiple theories. Multiple methodologies, right? So this is how I took a step back, and the way I look at the markets, when I look at the underlying continuous contracts like the S&P or Nasdaq futures, I look at the 3-minute, the 5-minute, the 15, the 30, and the hourly. And then I do look at the underlying ETFs, because my research has shown me that when you trade the futures markets, you need the underlying ETFs, and I use those in what's called RTH, real-time hours. So I only go from 9:30 to 4. I don't look at any pre-market data on that, or pre-market or post-market data. So we had some really, really good moves here today in the from the time we gapped up. And when you look at the market, you can see here. I'm going to show you the 15-minute time frame on the S&P futures. And so right around here, we got the buy reversal right around the time is that? That was the on the S&P. We got the buy reversal on the 15-minute time frame on the S&P right around the 8:15 number, right before the PPI number came out. And then you can see this is what I call a positive MACD, yellow over blue. You have a rising ADX. You have some big buying pressure. So 85% of the time I use indicators 1, 3, and 4, and 15% of the time I'll use all indicators 1, 2, 3, and 4. If you look at this pattern right here, this is a little oversold condition into the positive MACD, into the buying pressure, into the rising ADX. So when we got down to that 5401.5 level, we never looked back. We ran north of almost 48 handles here on the S&P. If for those of you who are new to trading, every 1 point on the S&Ps equals 10 cents on the spiders. Okay, every 100 points on the Nasdaq equals every 50 points on the Nasdaq equals $1 on the Qs. So it's really important to understand the relationships when you're trading. So if the Nasdaq let's see, the Nasdaq ran like 18,900 up 1. Nasdaq ran right. So every 100 equals 200. So there it is on the Qs. So what's important here is that when you're trading the markets, right, to have the best tools available, and that's why I'm so proud to be part of Back to the Futures, to be able to teach you the futures markets and have the technology and the mentorship each and every day. It's important that when you're trading the futures markets, like I said, to have the underlying ETFs. So right in front of me, I have the S&P futures on the 5 and the 15. I have the 3-minute time frame off to the right. Then I have the underlying ETF, the spiders on the 5 and the 15, and then I have what's called the SDSs, which is another. It's the Pro Ultra Short, and that gives me confirmation as to the patterns, right? So again, because the S&P futures, the continuous contract, is trading over 23 hours in a day, the math is going to be completely different looking at the underlying ETFs, which I have set from 9:30 to 4. So when you look here, you can see that, again, my indicator 4 is keeping me in the market, right? Telling me which way the markets are going. But prior to coming into today, I had buy signals on the underlying ETFs on the 15, the 30, and the 60-minute time frame. That meant that my indicator 4 looks exactly what you see now. I'm in buy mode on those time frames. So when we got the push down this morning, and then we ricocheted right back up after the PPI number. The S&Ps traded down to like the 53.93.5, and they never looked back, and we rallied over 50 handles from there. So what's trading futures is to me, like I said, I love the futures markets. To me, I traded nearly 2 billion shares in my life, but I love the futures markets. The futures markets give you such leverage and such, I like everything trading in quarters versus in pennies, and where the Nasdaq is, and oil trades in pennies and gold trades in dime increments. So I like to see the ability of the depth of the market. I can see it, the size of the market on the bids and the offers. It's important to be able to learn how to use the ladder, which I call the matrix, to be able to learn how to put positions in, put your stop orders in, learn to scale in and scale out of a position. That is very, very important, depending on your account size. If you're starting brand new, my personal opinion, you take a step back. And what do? If you take a step back, you then start with paper trading, then you go to the micros, and then you go to the big one. So for example, let's say on the S&Ps here, you look here, let's say you bought an S&P future right here around the 43 level. I'm just giving you an example on the oversold condition and the trend. And then let's say you bought one micro, okay, at 43, and you just sold it at 46. Well, gross, you made $15, $5 a point. If you bought a big one on the S&P, you bought one, and then you sold 43 and you sold 46, then you just made $150. So again, a lot of leverage gives you the ability to really, try to achieve your goals a lot faster with less capital than you going and trying to buy a Microsoft or a Tesla or Nvidia or a Meta, because these things are now, even even Meta's over $500 a share now. So you see why a lot of people are gravitating towards futures. Many years ago, I actually was in Chicago with the head of the CME, where I was having dinner on his birthday, and we were sitting across from where he lives, and he could not wait to get the micro E-minis out. And it was just such a, because there was so many people using the CME simulator, that he wanted people to get off the simulator to real-time trading. And when you're trading a micro, if you buy one contract and you lose 4 points, it's $20. I understand nobody wants to lose, but at least it's not losing 200. If you bought one E-mini futures and you lost 4, it's $50 a point versus $5 a point without fees. So, futures markets, I think, are going to explode. I'm so happy that Tradier is really getting into the futures markets. To me, I think there's no other place where anyone, if you're trading stocks, you could do both. If you just want to trade futures and at least learn, for me, this is it. This is where I wish I started year back then, but things happen for a reason in my 41 years when I have no regrets. But trading the futures markets gives me the ability to really see the market, to be able to really put some capital to at work and trade them, and basically with less capital being involved in trading stocks. So again, that's a very big advantage in trading futures alongside the margin. And I have 5 keywords. My 5 keywords are consistency, discipline, confidence, patience, and passion. You got to be patient, wait for the setup, understand the strategies that I teach each and every day using the software. You want to be able to have software in front of you that gives you the confidence each and every day, maintaining discipline and be consistent every single day. And obviously, you got to have the passion that you really want to do this and learn. To me, anything worth doing to the fullest, you need to apply yourself, learn. And this is what I do each and every day. I've been doing this, like I said, for over 41 years. So love it. I have no regrets. Every single day is a different day. And there are opportunities, and I can tell you based upon my research that patterns tend to repeat themselves over and over and over again. Okay? All right. So again, looking at the underlying ETF here, the spiders, I want to show you how important it is to have this. So coming into the day, you can see the gap up right here on the spiders. We have this big gap up after the PPI number came in better than expected. I already know, seeing this, that the 15-minute time frame on my indicator 4, blue over orange, is very bullish. And now it's also bullish on the 30 and 60-minute time frame. So what did I need to know? I needed to know one thing, okay? I needed to know when the S&P futures right here reverse to buy at 8:15 in the morning, okay? And then here at 9:30, right here, 9:15, 9:30, they were still bullish, right? I knew that basically that now we're going to be going into an uptrend here, right? Because prior, let's just say, for example, right here, I knew that the 15-minute time frame was negative, even though it was pre-market. But coming in at 9:30, ding, 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 I already saw that the S&Ps had now correlated on the 15-minute time frame, the continuous contract, with the underlying with the spiders, the underlying ETF, and that gave me the ability to do what? To now say, okay, I'm going to swim with the tide versus swim against the tide, right? It's very important to learn how, when you're trading the market, to be able to recognize based upon visualization. So everything I do is based upon visualization and repetition, to be able to identify these patterns that repeat themselves and to see things that happen. Okay, whether you're trading S&P futures, whether you're trading NASDAQ futures, whether you're trading the 30-year bond, gold, oil, or anything that you have your heart desired on, the YMs, the RTYs, it doesn't make a difference. As long as you understand that when you're trading the futures markets, my research has shown me that during the US session, You need to have the underlying ETFs at right next to it, and to be able to identify the patterns. Okay. Like I said, we have a trend, we have a buy reversal, we have a sell reversal, we have a correlation, which I just showed you what a correlation is, when one time frame correlates with the next, okay? And you have what's called a disconnect. So for example, let's just go back to the S&P futures here. You can see that, let's just say for argument's sake here, that this was during the real time at like 9:30, where the S&P futures reversed to sell orange over blue. Let's say it's 10 o'clock in the morning, but the spiders are still bullish. Well, one's going to give. Either the S&Ps are going to go back on indicator 4 to buy, or the spiders are going to reverse to sell, correlating with the underlying with the continuous contract. In this case, it was pre-market, so there was no disconnect. And then obviously when the markets opened again, like I said right here, I already knew at 9:30 that the 15-minute time frame on the S&P futures was very, very strong. And the underlying ETFs on the 15, the 30, and the 60-minute time frames got very, very, we're in very, very big buy mode here. All right, we're just seeing some move here on the S&Ps. I want to show you a sell divergence pattern here on the S&Ps here. If I can just S&Ps are. So basically, this is a sell divergence here. If you draw your horizontal line right here, and you can see the highs here, okay? I was actually calling shorts here prior to coming on to the back to the futures right here. And basically, why was I doing that? Because this is what's called a sell divergence. You're making new highs, and the MACDs did not confirm the high. So it's important to understand that divergence patterns happen there are different strategies for divergences. In this case, this is a non-confirmation. Also, at the time when we got that big push up to the S&Ps near the 5450 level, I had over a 97 overbought reading on both the 30 and 60-minute time frame, combined with the 15 right here on my indicator 3, which is my overbought oversold oscillator. And then as they're making new highs, the MACDs on the indicator 1 on the 5-minute time frame did not confirm the highs. So you had an overbought condition combined with a non-confirmation. Very, very powerful strategy. Very powerful. Okay, very, very powerful. All right. If anybody has any questions, this is a great time to ask questions. Again, this is our second show of Back to the Futures. So I just want you all to understand that I'm here. If anybody has any questions, you can text me at 914-500-7484. Okay. Looking here at the right now, when the 5-minute time frame right here at 10:45 in the morning correlated with the 15, it also correlated with the underlying ETF on the 5-minute time frame. So you can see this is a 10-bar weighted moving average. It goes back to the actual inception of the asset, and it varies on. You can see it's different here on the 15, it's different on the 30, and it's different on the 5-minute. So everything is dynamically different based upon the combination of using multiple time frames. So when you got this cross here on the 5-minute time frame, it told me now that the 5-minute time frame not only correlated with its 15-minute time frame, it also correlated with the underlying ETF on the 5-minute time frame. And then these little pullbacks here were really off of the 3-minute time frame. Okay, so you can see indicator 3 on the 5-minute time frame. If I bring up the 3-minute time frame, you would see that they got some deep oversold conditions. And let me see if I could bring up the 3-minute here. Where is it? 3-minute. Let's see how I could do this here. Up here, I'm going to bring up the S&P futures. Bring up the 3-minute. Okay. See if I can get the 3-minute up. Oh, got a little glitch here. All right. So anyway, so if you look here, you can see this is the high, the low, the close here on TradingView. And my software that you're seeing here is built on TradingView. and it gives us the ability, time to turn, yeah, and yeah, so basically what you want to do is you want to be able to give the ability to read the market correctly, because based upon my research, the these patterns repeat themselves over and over again. Okay. All right. So what we're seeing here now, we just saw a big push down on the S&Ps. They pushed all the way down to the 34 and a half. So the S&Ps just dropped 16 points right here. Tomorrow we have the CPI number. And what's important is that when you're looking at the market here, and I'll show this to you on this, I think it's a little bit clearer on the spiders here. Let me just show it to you on the SPY. So you can see here, right? You can see, if I could just do this a little bit better here. You can see that the new high here that we got on the spiders, and if I just shrink the chart a little bit, look at how the MACDs, these 5-minute MACDs right here, did not confirm the high. Meaning, if you take this MACD and you draw your horizontal line from the top of this peak right here, okay, this is a non-confirmation. I caught this short here, and then I caught this short here. Okay, so if you just leave your horizontal line right there, you can see that these MACDs did not confirm the high off the 5-minute time frame. Now, there's a strategy to this. The MACDs have to be above what I call the pivot line, and the pivot line is a solid white line on each time frame. So not on the 15, the 30, and the hourly charts, my MACDs are way above the pivot. Okay, and with combination of overbought conditions. So if you look at these new highs that we had here, over here, and over here, well, guess what? We had overbought conditions. If you see this right here, you can see the 15-minute was overbought, and you can see this on both time frames, and it was overbought on the 30 and 60-minute time frame. So really great pattern, non-confirmation, making new highs, and that's why I saw the opportunities for shorts. Now, you can have, like I said, this is a trending day, right? But you can have a buy and a sell divergence, which is one of the two strategies in a trend. And there it is. We just had a sell divergence / non-confirmation in a trending market, okay? So that's how you read the market, as just part of one of my strategies to look at the markets. And of course, there could be a buy divergence, a buy non-confirmation in a negative trend. But this is a really good pattern. And if you were patient enough and you could just keep lowering your stops on the short, it paid off, even though it hovered here for a while. Okay, it hovered here for a while. So what's important, okay, what's important is when you're looking at the market, okay, you can see the MACD now is negative on the 5-minute. You got indicator 3 rolling over. I still believe that we're going to try to get a pullback here, get a deep oversold condition on the 15-minute time frame. I'm hoping for something like this right here between now and maybe 3 o'clock, where then we're going to get another push up, okay, where we're going to get another push up. If you look at the market, you can see just on that drop here now on the S&Ps, the S&Ps were trading at the 47 level. They dropped down to 33, and they rallied right back up 11 points on the S&P. Now, let's just say, you know, on that pattern right there, based upon the time frames, based upon the trend, you bought maybe at 34 and a half or at 35, and maybe you tried to buy some more at 33, and now you just sold it up maybe, you know, 5 points, 6 points, even at 6 points on one contract. On a big one, that's $300. On a small micro, that's $30. So I want you to see the understanding of that, okay? Why micros are very good. A lot of people like them. There's great rates here at Tradier futures, so it's really up to you what you like. Most people who are trading the markets for the first time in the futures markets, they go from the simulator to the micros, from the micros to the big ones, especially when there's great patterns that set up. So we had a correlation pattern today. You can, like I explained, the 15-minute time frame correlated with the 15-minute underlying ETF, the spiders, and we never looked back. And we just bought little mini pullbacks off the smaller time frames, the 3 and the 5-minute time frames. And now I'm hoping to get one nice pullback between now and probably 3:15 on the 15-minute time frame. And I think that should push us up to new highs later on today. If anybody has any questions, again, please text them here. We have about 5 minutes. It's really important that, in the 30 minutes that we have here every Tuesday and every Thursday, to really grasp the art of trading futures. And I tell people all the time, if you can master the art of divergences, you've mastered the art of trading. And this is a very key component, because having technology, I spent nearly 10 years of my life building this and building this and forward testing, not back testing, forward testing, and being able to see it in real time, being able to see the markets for what they are, and then being able to see the markets based upon visualization and repetition, and being able to trade the markets. Now here on this pattern right now, this is a little bit of a bearish pattern on the S&Ps, and we should get another push down. Just hit 47, rallied 14, and just dropped about 2 on the S&P. But I'm still waiting for this really decent pullback on the 15-minute time frame, and I think that will set up a great long on the indexes, especially the Nasdaq, which is really strong today. Nasdaq's up over 2.2%, S&P is up 1.4% right now, and but again, it's really all predicated. Okay, it's all predicated on understanding how to use combination methodologies, how to combine the indicators. I have indicators 1, 2, 3, 4, and use multiple time frames to really enhance your trading. It's really important to understand that what I built here, I've taught some of the top hedge fund managers in the world. Okay, and it's important now that I teach you, and I'm so honored to be part of Tradier Futures. I think it's an unbelievable opportunity. Great rates, great margin, great technology. You got me. I'm trading over 41 years, and to be able to understand the futures markets with a seasoned veteran. And it's important, like I said, to have this technology, to be able to learn it, you can even, during the Tokyo sessions at night from 8 to whatever, you can go on a simulator, you can identify these patterns, and you can identify these trades using the multiple time frames. Now, like I said earlier, during the Tokyo and European sessions, you're on your own with the continuous contract. I did my research. You don't need to have the underlying ETFs working, and at that time, obviously they're not, because the markets are closed for the underlying ETFs. But you can trade the continuous contracts during from the Tokyo and European sessions using the software. Great. I mean, we've been up and away since then. We got a little bit of a pullback around the 10:30 time period. If you see here, I want to just bring up the diamonds. Okay, so we got a buy here on the diamonds, the DIA, in case you're trading the YM futures. You can see this is the MACD is positive from below my horizontal line, my pivot line, some decent buying pressure. Indicator 4 reversed to buy. Now, the key thing with this strategy is that the 30 and the 60-minute time frame were already bullish. So when the 15-minute time frame reversed to buy, right, boom, you can buy all the little mini pullbacks on the 5-minute time frame. But this was the key right here. When the oscillator, my overbought oversold oscillator, pulled back here on the 15-minute time frame into this positive MACD, right into my 10-bar moving average, the Dow ran another 300. So you can only imagine what the YMs did. They rallied 300, and as did the diamonds, the underlying ETF. Again, if you're trading the YMs, my research is showing me you need to have the underlying ETFs next to it. This is a great show. Again, I looked up, it's 30 minutes. I'm so happy to be here. Again, I'll be back on Thursday from 1:30 to 2. Have a great day trading. Anybody has any questions, you can text me or call me 914-500-7484. Have a great day trading, and see you Thursday. Back to the futures. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.